Welcome back, dear students. We are revising the chapter Final Accounts, and today we'll be doing Profit and Loss account in detail. If possible, dear students, please keep the specimen of Profit and Loss account with you. In the prior video, we saw that trading account is directly related to factory, that is manufacturing or production of goods. Manufacturing is a very important part of business, but apart from that, there will also be an office which will take care of the administrative, financial, and selling and distribution part of the business. Profit and loss account involves all these three overheads. So, to sum it up, profit and loss account will give final working results of a business. Let's see how that is possible. We'll get into the technicalities of profit and loss account. Profit and loss account is a nominal account. Nominal account rule states that debit all expenses and losses and credit all incomes and gains. Based on this rule, we prepare our profit and loss account. We first bring forward trading results from the trading account, that is, the gross profit, we transfer it to profit and loss account to the credit side. So we have by gross profit brought down to the credit side. On the other hand, if we had a gross loss in the trading account, then we would transfer it to the debit side of profit and loss account. So we have two gross loss brought down to the debit side. Then follow all the other expenses and losses to the debit and all the other incomes and gains to the credit side. However, which would be the other expenses and losses or incomes and gains? In profit and loss account, we have indirect expenses and losses and indirect incomes and gains. Indirect expenses and indirect incomes are indirectly related to manufacturing of goods, or you can say they are indirectly related to factory. Confused? Let's say, for example, business has taken a bank loan. This bank loan may have been taken for maybe purchase of a machine like computer, or maybe for purchasing land, or for some construction work. But if loan is taken, then business will definitely pay interest on this bank loan. Interest on bank loan is not related to factory, but it is related to business. So, we can say it is indirectly related to factory. So, interest on bank loan is an indirect expense. Indirect expenses are indirectly related to manufacturing activities. As we discussed earlier, profit and loss account gives final working results of the business, and that is nothing else but the profit or loss of the business. So, profit and loss account includes trading results, that is gross loss or the gross profit, and indirect expenses and losses, like in our example, interest on bank loan, then we have rent paid, depreciation charged on fixed assets, salaries paid to employees, etc. Then we have indirect incomes and gains like interest received on investments, dividend received on investment in shares, etc. After posting all the expenses and losses and incomes and gains, then we close profit and loss account. Suppose the incomes are more, that is the credit side total is more, then we get a net profit. This net profit will then be transferred to partner's capital account or current account as may be required in the question. On the other hand, if the expenses are more, that is the debit side total is more, then we get a net loss. Like the net profit, net loss may also be transferred either to partner's capital account or to the current account, as may be required in the question. Net profit is called as the credit balance of profit and loss account. Net loss is called as the debit balance of profit and loss account. So here's the specimen of profit and loss account. It's on page number 17 in your government textbook. Please go through it and get back to us with your queries. Thank you dear students for watching. Hope the video will be useful to you. Thank you.